All right, what's good, everybody? Happy Monday. Good, strong start to the week if strong means down. So aggressive drop here in the markets today. We're going to go over all of that, kind of talk about what it means, what adjustments you might want to make, what things are going on in the markets. Just another exciting Monday. Here we go. So first things first, if the markets are falling, we know, our customers here at Jazz Wealth know, that's a good thing, right? We have a long time until retirement. We're doing just fine, so we want to buy that discount. It doesn't feel good when the markets fall, but remember, and look, I got all these going out here, all these different towels. That's not even an eighth of all of them. But remember, if you're one of our customers and you want this towel, it's just a silly, fun way to remember that the markets recover 100% of all declines 100% of the time. This is proof that this is the kind of thing I'm prepping for. I am preparing for the markets to fall through the remainder of the year. That doesn't mean I think the markets crash. It doesn't mean I think the world is going to end. It means we've been up for a long time, and there are a lot of things starting to show themselves. I can't say specifically what I think is going to happen. I'm not allowed to make those comments, but I can point out the things, like I've been pointing out financials that are not participating, and we know that financials make up the biggest chunk of all of the S&P, so we need them to participate. We'll go over that in a minute. But anyways, if you're one of our customers and you want one of those towels, I'm happy to send them out. Just send me an email, send me something in some way to let me know that you want them, and we'll take care of you there. Otherwise, we're just going to go through little by little and start sending them out to everybody. So if you want them for sure, let me know. All right, let's talk about the markets here today. I don't mind some of what happened today. Some of it has me very concerned. So we're going to go through what I think is sort of normal and no big deal, and what I think is maybe something we want to focus on going forward. So we will, just like we always do, we'll kind of go forward with this. Let me make sure we have the right thing in place here. I'll get out of the way. So you should be able to, look, I got all these envelopes. This is all the towels going out. Maybe we can get those going. All right, so here's what we have here. The Dow was down 500 points on the day. That's what you see on the screen. I'm going to go ahead and zoom in just a little bit. That is what you see there on the screen. The Dow actually finished the day lower by 327. Okay, so one of the things that technical traders are looking at, we've been talking about it, we've had it on our charts here for this whole time, is this shorter term uptrend. That's officially broken. That is gone. So anyone that used that on the way down for their trailing stops or profit taking or even their stop losses, that's now over. The bigger trend, the people that are in for the longer term, that's what you have left there. Now, personally, I don't want to see it close under the 200-day moving average. It actually kind of sucked back up right before the end of the day, so that's good. That's good news there, but the Dow still finishing the day down 327. If we go over to the S&P 500, that has officially broken this trend as well, today being the day. And you can see how when those things happen, people make decisions. If you're not familiar with charts, you're one of our customers. Next week, we're actually going to go over all of this stuff in our Wine and Wealth class to show you exactly what all this means. How do you know what's good, what's bad? And I've spent years teaching beginners all about these charts and everything. So I have a really unique way of sharing that with you guys. And so we'll be doing that for our customers. But the bottom line is this trend is now broken. You can take this line off the chart. Basically, what you're hoping for, if you're a bull here in the short term, you're hoping that 200-day moving average, which is the red wavy line, holds in place there. So without getting too much more in detail, that is that. Now, tech. The Nasdaq 100 down on the day by 160. That's a big drop, right? So if you're following along, that's a big drop. Now, this I don't mind at all. This is the part of the market where, to me, this doesn't shock me. It shouldn't shock anybody. And I want to explain a really, really elementary way to explain this. So look back. I'm going to zoom out here so you're not going to see the details as much, but look back at the market over here. Okay, so all the way back at the beginning, what happens? Market breathes in, breathes out, breathes in, breathes out. It's very simple. It's just a clean thing. Imagine yourself. You breathe subconsciously. You don't need to think about breathing until you start running. You don't need to think about breathing until you're pedaling on a bike or playing a sports game or something, and all of a sudden you start taking deeper breaths because you're running out of breath. You're trying to catch your breath. So look at the markets. In the most simple way I can explain this to a kid even, you'd say it's breathing in, it's breathing out. It's breathing in, it's breathing out. What happens here? Deep breath in. Anytime you take a deep breath in, you can't just let out a little bit, right? You've got to go and then catch your breath, right? So that's what's happened here. Big deep breath in, and then it exhales to everything out there, okay? Big deep breath in, exhale out again. Now, what happened in the short term here, we've been talking about the Nasdaq, right? Being this nice breath, and then a little break. And then a nice breath, no real breathing out. So this, in this last couple months, has been one of those sort of sucking in, and it shows even better when you look at tech stocks. Look at some of the, oh, no, that's not it. Look at some of the tech stocks that have taken their moves higher. I was going to go over the FANG names, but the charts, there we go. So the FANG names, your Facebook, after that Cambridge Analytica study, it sucks back in this huge breath. It has to take a break. Now, whether today is the start of that or not, we don't know. What's another one? Netflix, huge move higher. Normally Netflix breathes and then exhales, then breathes and exhales. What happened recently? Huge, huge breath in. This doesn't surprise me. Stocks will always do this. And a great way to look at it, if you don't want to know that sort of breath analogy, see the green line on the chart? That's the 20-day moving average. It's 20 or 21, one or the other. Whenever a stock moves too far away from that moving average, it will come back. It's not an opinion. It is not my guess. It is a statistical fact that it will come back to that moving average. And so that's all that's happening here. This stock, every ETF, every product on the planet likes to stay right there next to that 20-day moving average. It lets people know they're getting basically a good deal. Anything too far above it is like the housing market being overpriced. Eventually people stop buying. They know they're not getting a deal. Anything below it, that's why you always see it snap back, is because people want a discount. If you can tell me that I'm buying cheaper, significantly cheaper than the last 20 days average price, is basically all that means, then people get excited about that discount. So this sort of thing, I don't mind. Without making this sort of a long-winded video, I don't mind this too much. What I do mind, financials. We keep mentioning these financials. This is a chart, look, just go back from like here. So if we look back to just March, what have we been saying? It's just like the financials can't get anything done. When they do have a string of good days, they get no follow through, right? So this right now, the financials, they're trying to breathe in and they're being forced to breathe out. Elephant steps on their chest. You've seen the commercial. So it's like a breath in, squeeze back out. Breath in, push back out. It can't seem to get going, and that bothers me because we know we need the financials. We know we need the tech market. We've had tech. Tech's been pulling, going, hey, financials, come work with us. Let's get this market going. And the banks just can't get anything done. I think this looks really weak. Now, over the next few days, you'd fully expect to see a little bit of a recovery. But I think the banks, and kind of what lead me to my analysis that the second half of this year is just not going to be very... it's not going to be very exciting, so you want to be sure you're ready for that. In other sector news, let's go over to transports. The transports are one of the most heavily affected by the trade war, the things that are going on here. And today the transports were down just over 2%. They did better by the end of the day, but FedEx fell for like the 7th day in a row, down 3% on the day. Makes you always want to look at UPS. Whenever you think FedEx, you think UPS. So UPS also down 3% on the day. Here's the thing. I always try to put in a little education here. We want to get rid of this. All right, we're going to erase this bloodbath here and just get you guys thinking good things. Now, let me do this real quick because we did semiconductors, we did consumer staples. Now I want to do transports. The ETF is IYT, if you're following. All right. So we talked about the holdings inside of these ETFs, and I just mentioned FedEx. That symbol is FDX, and of course UPS is UPS. So FedEx on the day was one of the weaker stocks. It has been, I just showed it on the charts there, down 3%. FedEx makes up 13.99% of the IYT. So that goes to show that basically whatever FedEx does in a large way is going to have an impact on the IYT. Now UPS makes up, oh, don't hold me to this number, it's like 6.83%, something very, very close. Did I write it down? 6.78, so I was close. So that's 6.78. What do you have? Over 14% of this ETF is made up of two names. That's a little heavy, right? So that just goes to show you're basically sort of relying on these. Now, there's other names, of course, in there, Boeing and stuff, but as you go down the list, you end up with smaller and smaller holdings. The rest of them end up around the 2%, 1%, and so on. So keep that in mind if you're ever following along with some of these ETFs. That's another example. This IYT, a lot of people like to use that to track the transportation average. Just give it a little bit of leeway there for how heavy it's weighted into the transports. Okay. FANG stocks, it's not really a sector, but the FANG stocks that have been holding everything up, Facebook, Amazon, you can see all of these starting to sort of roll over. That's okay. They have to have moments of pulling back. Again, all this tech stuff, Netflix, I totally am okay with that. I fully expect. Now, the problem is trying to time when that's why we don't try to time when these things are going to pull back. You just watch it day by day and you go, okay, if it falls for a few days, I'm going to understand that. All of these people that have nothing but profits, at some point, any bad news, like today, with people a little concerned, it's just going to cause them to take a profit. I don't think that changes anything there, okay? So Netflix down on the day as well. A couple other stocks in the news, and then we'll run here. I know this has been a little bit long. You got Harley-Davidson. So the trade war thing, definitely affecting these guys. Basically, we put tariffs on steel and aluminum or something over there in Europe, and Europe comes back and says, tell you what, we're going to put some tariffs on you guys as well, and what we're going to do is raise the duties on motorcycle manufacturers. They like went straight after these guys just to try to hit us hard. They said that they're going to raise their tax on these motorcycles that are made in the US, sold in the EU. They're raising it from 6% to 31%. So here you go. I mean, that's the definition of a trade war. These guys are fighting back and fighting back to hurt our companies. So Harley-Davidson was down on the day by 6% because they said, you know, the problem here is we're going to have to shift our manufacturing from the U.S. over to other out of the country sites. That's going to cost us about $100 million this year to do that. And going forward, it's going to cost us an additional $2,200 per bike that they sell in the EU. And so obviously investors don't like that. That's going to put a hurting on their bottom line there. And so nobody wants to see that. We'll go over to a couple others here. Micron Technologies, that's one of the bigger semiconductor names. They also have exposure in China. I believe pushing 65% of sales come from China. So that stock was down 7% because this morning the idea was, we were going to limit Chinese investment in U.S. stocks. That turned out to be false. So basically the entire reason the market started falling turned out to be false today. The White House came out numerous times to say that. However, the problem now is, well, what were they trying to say, right? So if you go, wait a minute, you know, if you weren't going to do that, then why did any of this come out in the first place? And investors don't like confusion. So Micron was down by almost 7% on the day. And again, because a lot of that comes from China, a lot of their sales. And lastly, we'll leave you with Campbell's Soup. We'll keep it positive here to finish off the day. Also American Express was higher on the day too. That's a stronger stock. Campbell's Soup was higher on the day because Kraft Heinz, that's another public company, of course you know Kraft, has talked about acquiring the company, and Campbell's Soup has really struggled lately. When they had their earnings back here, we talked about this, why they were struggling and sort of what they admitted to, and they really put it out there that they'd be interested in talking about a buyout or an acquisition of some kind, and it seems that Kraft Heinz saw that headline and decided to come along and I don't know, maybe give it a shot there. So we'll see what happens there. Usually what they say is where there's smoke, there is fire. So we'll probably be hearing a lot more about that. Otherwise, look, hey, if you want this towel, you're one of our customers. I know it's corny. I'm going to keep promoting it because I want you guys to have this. I've already had a couple customers say, I can't wait for this towel because they're a little nervous, right? They don't like the markets falling, but I want to tell you that it's okay. It's going to happen. Get your mind right. The markets are going to fall at some point, just like they're doing now. And so you want to welcome that. You want to welcome it as an idea. And I like the idea. I had this idea to make these about 2.5 weeks ago with the intent of this happening. So this is like proof. You can't just go make these all in one day. Proof that I want to start preparing you. Our classes are going to be revolving around the statistics around market declines again. We're going to get prepared for that. And of course, if you are close to retirement, we've already prepared you for this. This is already something that you guys are ready to handle. So, hey, if you have any questions, if I've caused any questions, you're one of our customers or you're not, you're thinking about Jazz Wealth and you just are curious what we do, how it all works, go to our website, check it out. And of course, if you have any questions, you can get with me directly I will call you. You can set up a time specifically if you want to chat. Otherwise, just click Invest Now. We'll get you started. I am going to head home and get my daughter filling out some of these envelopes, get these towels out, and we'll talk to you soon. So enjoy, and see you tomorrow.